unnecessary litigation. It is always desirable to have a written agreement, because a lot of litigation, unnecessary transaction arises when there is two or more than two person. And the partnership deed, when it is a written agreement, orally it is not accepted. Always you have to go for written evidence. Written agreement should be duly stamped and registered, which then it can be told as a partnership deed. After registration, each partner is given a copy of the partnership deed. And what the deed contains? The deed contains the name of the firm, the nature of the business, what type of business will carry on, the name of the parties, the amount of capital to be contributed, the place area where it will be carried on, and the profit or loss to be shared by each partner, loans and advance, the amount of drawing, the rate of interest on capital, duties, power, and obligation of partners, remuneration to be fixed to be given to them, any arbitration in case of any dispute case, arrangement in case of partner becoming insolvent, how to maintain the account, who will maintain the account, and in case of goodwill, calculation of goodwill, when new partner is admitted, and revaluation of assets and liability, how to revalue the asset and liability in case of death or retirement of a partner, the arrangement of dues that will be given in case of retirement debt of a partner. These are all the points which should be there in the partnership deed. There are 18 points that should be verified, that should be carried out in the partnership deed and by all the partners in the partnership firm. It is not compulsory to register, but there are certain limitation if there is partnership firm are not registered. You have to register with the registrar of firm, ROF. But it is under partnership 1932, it is not compulsory. Okay, but there is some limitation also for unregistered firms. So also it is better to register, and registration can be done at any time. The limitation is that easily also you can done. There is no such more formalities as you will get in company. Okay, and both the partners will invest money. Both the partners will invest the expertise knowledge. And partnership also, business also is flexible if it is mentioned in the partnership deed. And the secrecy also can be maintained because there is no obligation to publish the accounts of the firm. Okay, so that also can be maintained. And some partners are liable to loss and risks because they take keen interest. Those who work, they take more risks, and when you are taking more risks, there may be more return, there may be less, or there may be loss also. So some partner take that risk. Due to rule of this, the rights of the partner are fully protected. We have to control on the careless decision, and the diversification of risks also should be managed, because though both the partners are there, the risk will be diversified. Okay. Limitation is that also limited capital is an issue. You cannot invest more than two. Minimum two partner will have to invest money. Here also unlimited liability is the case. No public confidence, because accounts are not published. It's not mandatory to publish the accounts of the partnership firm. So public will not have not have a confidence on your organization. You cannot transfer any share or cannot interest, because without taking the interest, without taking the approval of the partner. And there may be uncertainty. If two partners are there, one partner died, then the partnership firm will be dissolved automatically. And conflict among partners, it is the main point. It arises at any point of time. Another thing is that there may be implied authority that each partner will act as agent and each partner will act as owner of the organization. So they do not think that they are doing as because both the partner are the owner, so why they will act as an agent. So both the partner are owner and the servant also of the organization. Then after this partnership, the joint Hindu family started. Okay, the joint Hindu family started. They were applicable before in India, except Bengal and Assam, because the senior-most male member of the family will head the organization of joint Hindu family, and it is only prevalent only in India. Okay, and this is a farm belonging to joint Hindu family and governed by the provision of joint Hindu family law. They are called the successive generation after the head member of the family, maybe great grandfather, grandfather or father. They are known as the Katta. It is as per the Hindu Succession Act 1956. Then the partnership has transformed, and in 2008 or 9 it has come. this limited liability partnership LLP. Okay, that partnership was unlimited liability. This is limited liability partnership. It is governed by regulation of 2008. Okay, LLP Act 2008. In LLP, the minimum number partner is 2, but there is no limit to maximum number. Okay, but in the previous one there was a limit, and the governance structure would be by contractual agreement between partners. The management will be including those designated partners who are authorized by LLP agreement. There are transfer of interest before in that there was no transfer of interest, but in LLP there is transfer of interest. Previous there was no need of any accounts publication. The audit is also not mandatory, but here if the capital contribution exceeds 25 lakhs, okay, then audit is needed. If does not if exceed 25 lakhs, audit needed. If does not exceed 25 lakhs, then audit is not needed. And Alwan meetings of the partners of LLP is also not mandatory. Then we will go to company form organization. This is the much more needed organization, and there is huge rules regulation in company. When you want to start a company, in company in 1956, now company of 2013 has been incorporated. Before one OPC, one person company was not incorporated. Now a single person can start a own company. Before, an individual cannot start a own company. There will be some number of the minimum number and maximum number. Okay. Now the maximum is 200. Before it was 50. So why company started? Due to limitation of partnership and sole trader, the company of our organization started. Because company has a limited liability. Okay. As the introduction of limited liability partnership hinted the evaluation of company, and there is the transferability of share. There is an association of person, and here important thing is that business and owner are two separate persons, and huge amount of funds are invested, and you can invest much more fund through share. For this, the company started. Okay, and the company is artificial person. Every human being is a natural person. A company is artificial person, and you have a seal of the company which is affixed in all the legal document of the organization. And the company, the partnership, two partners, if one died, then partnership will dissolve. But in company, the shareholder may die, may come and go, but the company will go on for an unlimited period. That is very, very important. And company, the ownership and management different. You may be a shareholder, but you may not be taking decision making, taking part in decision making organization. Suppose you hold 5 shares, you are the owner of the company, of the 5 shares, but you cannot take in decision making. Cannot take in the management of the company. In case of public limited company, the minimum number is 7, no limit was there. In case of private, it is 2 and maximum 200. Now it is 200. Okay, before it was 50. You can transfer the shares freely. The object should be properly utilized and should be stated. 3 important documents the company has. Remember this, a very important question. One is memorandum of association, another is article of association, another is prospectus. What is memorandum of association? It is the constitution of the company. Like we have the constitution of the company, it is the legal document of the company. Number 2, article of association. It consists the internal management of the company, the internal rules and regulation of the company. Number 3, prospectus. Prospectus constitutes the details of the company, the registered office of the company, who is the director, who is the auditor, and what is the amount of share capital. How much plant is there, when the company started, how much we have to invest, how much are to issue, what is the issue, subscribed share capital, how much asset is there. Everything is written in the prospectus. Then we'll go to different types of company. On the basis of incorporation, there are 3 types. One is statutory company, another is a registered company, another is chartered company. Registered company is company which is registered the company in 1956. And all company under a private sector are coming under that. Chartered company was before, that is East Indian Company, Bank of England, which was before under special royal charter. That is chartered company. Now it is not existing now in India. And if you think of statutory company, they established a special act of parliament. You can take Reserve Bank of India, LIC, okay, Food Corporation of India. They are a statutory company. On the basis of liability, there are 3 types of company. Unlimited company, company by guarantee, and company by share. Unlimited company, I have already told. Unlimited liability, the same. Unlimited company means not only the business will affect business property liable, but personal property will be liable. Company limited by guarantee means the company is given guarantee and they're formed to promote art, culture, trade, sports, etc. Example may be club, charitable institution, etc. Company limited by share means the liability is limited to the amount of share held by them. On the basis of shareholder, there are three types of company. One is private company, public company, and government company. The private company, there is a restriction on transfer of share, minimum to maximum 20. In public company, and which is not a private company, the share is not restricted. The minimum is 7, and there is no limit to maximum number of shareholder or members. A government company, 51% of the paid-up share is held by central government or state government, or partly by the central government and state government. It is a government company. On the basis of functioning, there are two types of company. One is national and multinational. Multinational, when the operation of the company within the boundary of a nation, that is national. Multinational, when the operation of the company is beyond the boundary of a country, then it is multinational. Very dumb company, large capital you can invest, limited liability, and there is stability of existence. Okay, shareholder may come, shareholder go. Economies of scale. There is scope for expansion. You can expand as number of sites, as number of branches, and public will have confidence on it. And you can also transfer the share easily, because the shareholder can sell the share whenever they want. There is no need to take consent of other shareholder. Professional management. The management company is the head of director who was elected by shareholder. So experienced person as elected director. The day-to-day activities are managed by a select manager. So this manager are expert in the respective field. Company pay income tax at the flat rate, 30%. Okay, before. And risk is diversified, diffused, because membership is very large. Business risk is divided among the several members of the company. There is an advantage for small investors. Limitation is that there is difficulty in formation. The promotion of the company is not simple as proprietorship and partnership. The number of persons known as promoters should be ready to associate themselves with for getting a company incorporated. And the lack of secrecy is that management of company is usually in the hands of many persons, and sometimes there may be delay in decision also. That is known as reptapism, which occurs more in government companies. In company form organization, all important decisions are taken by either the board of directors or shareholder in the meeting. And neglect of minority interest, the representative of major group of shareholder become the numbers in the board of directors. The shareholder who are minority never get representation on the board of directors. There may be sometimes concentration of economic power in the top management. Some person become director in a number company and formulate policy to promote their personal interest. Okay. And more government intervention arises because government are more interested to have tax, to get the tax from the company. And there is possibility that some misappropriation promoters may float a company and issue share and collect money and manage the company in a very unambitious way. And the new concept is that one OPC, one person company, I have told. It may be registered by limited by share or limited by guarantee. Okay. There is no need to prepare a cash flow statement in case of OPC. Annual return can be signed by the director and not necessarily the company secretary. As section 92 tells us, there is no necessity for IGM to be held under section 96. And if one director signs the audited financial statement, then also it can be used properly. Financial statement can be filed within 6 months from the close of the financial year as against 30 days. Section 137 tells us. And specific provision related to general meeting and extraordinary general meeting would not apply. Section 100 to 111. And the compliance has to be done if resolution are entered in the minute book of the company. Section 122. This is special provision to OPC. Okay. And no minor can become member or nominee of one person company or can hold share with beneficial interest. And no person shall be eligible to incorporate more than one person company or become nominee in more than one such company. Another new concept is small company. What is a small company? This is a very important short question. The concept of small company has been introduced for the first time in company in 2013. Small company means, as per the definition of the name of the company, is that it means a company other than a public company. What does it mean? Section 2, subsection 85 of the Company Act 2013 tells us the paid up share capital of which does not exceed 50 lakh rupees or such higher amount when prescribed shall not be more than 5 crore rupees. That is a small company. Turnover for which is, and we will see the last profit and the loss account does not exceed 2 crore rupees or higher amount is prescribed shall not be more than 20 crore rupees. The small companies should not include holding company, subsidiary company, non-profit company, a company a body corporate. Yes, Kirot Kumar Bera, what is your problem? Kirot Kumar Bera is there? If you have doubt, you ask. Then we will go to corporate form of organization. What is a cooperative form of organization? Okay, there are district level cooperative form of organization. There are small cooperative form of organization. As you defined by the International Labour Office, cooperative organization is an association of persons. They're not started for the benefit of themselves, but they started for the benefit of the group of persons. Okay, and they have limited resources. They have the volunteer and join together to achieve some economic benefit with formation of this democratic way of setup. Okay, making equal distribution in case of capital and having good share of risks and benefit also. Every cooperative society is a voluntary organization, and every cooperative society has some stability because it is a self-governing organization, it is a self-sustaining organization, self-controlling organization, and they are run by democratic setup. Democratic setup is by the organization of the organization and for the organization. And capital is procured from members in form of share capital also. And the government, the Cooperative Society registered the Cooperative Society Act 1919, and we have State Cooperative Society Act also. And the objective of the Cooperative Society is service motive, to provide service to the member. Apart from providing service to the shareholder, the first duty is to provide service to the member who has started that. And the limited return is there, and the surplus will be also distributed to the members. After giving a limited dividend to the shareholder, the surplus will be distributed in form of bonus. There are different types of cooperative. There may be consumer cooperative, people who want to obtain day-to-day household and goods at a reasonable price. There may be producer cooperative, who produce the goods. Okay, maybe small producer, artisans from industry, small industry. Example is to raw material, preparing raw material and supplying them. Marketing cooperative, who help in selling the output and marketing the output. Housing cooperative, they operate in urban areas. They're providing housing facility to the members. Okay. Credit cooperative, they started by person who are in need of credit. They give small credit to the members at a reasonable rate of interest. And farming cooperative, they help in agriculture farm in the villages. And they cannot be the farming cooperatives, and they form a small cooperative society. They carry on the work jointly to help the small and marginal farmer to grow and take advantage of the large-scale business. There is also merit and limitation of the cooperative. Each and every organization has its own merit and demerit. And you can also start easily the cooperative form of society. It has a limited liability. And social service means you have to give service to the member. This is the mindset. And the cooperative has been adopted by the government, also has been funded by the government, has been provided financial assistance by the government. Open membership, everybody can join and be a member of the society. The objective of society is to provide goods to the member at a cheaper rate, and after that, they'll provide the goods to the other member of the public. Members do not have business experience. This is the demerit of society. And there is absence of mutual interest also sometimes. because it can be only succeeded. It's not succeeded. The cooperative is not succeeding because of this. There may be the conflict of interest or opinion among the members. There is a lack of interest among the members. That's a very important thing. For that, cooperative is not working properly. Coordination of the members, because members belong from different group, different mindset, and corruption is a very important thing which arises in cooperative, because that is started for their own benefit, for the selfless benefit, and for the benefit of the society, for providing the goods to them, to the members at a cheaper rate. But the corrupt practice and management and in the functioning of the cooperative society has made the cooperative society not to grow. Lack of secrecy. The secrecy sometimes get leaked by the members of the cooperative society. Okay, and they feel demotivated, because nobody can give a motivation to the members of the cooperative society. The motivation is very, very important. Then we'll go to the forms of business organization 2. It consists of the different form of business organization, and it consists of what are the criteria for the choice of organization. It consists of how to compare the different forms of organization. The ideal form of business organization is that it should be easy to form. Okay, number one. Number two, easy to raise capital. Number three, the liability will be limited. Okay. Both limited liability and unlimited liability, both has merit and demerit. Number four, there will be the operation is flexible, can be applied in everywhere. You can change everywhere. You can do the operation at your own time, and also the business scale can be also changed. Number five, it should be continued and it should be stable. Like partnership, sometimes if the partner died, then it will break down. So how to make the business stable? Business can be stable if this above 4 points are applicable. That should be easy to start. Capital should be coming, finance should be arranged, and liability to be limited. If there is unlimited liability, suppose you do any mistake in a business, then from your house also they will recover. So the management should be very, very effective, and efficiency of the management depend on the skill, motivation, flexibility, how to adapt to that, extent of government control, how to control the government and management. What is the rules regulation of the government? The government, if they change from one party to another, the rules regulation also changes. Business secrecy should be maintained. This is very, very important. Trade secret of the business. Any business which is unable to maintain the trade secret, not maintaining the trade secret or the profit secret, if it is leaked down, the business will not survive for a long period of time. Tax burden is very important. Before we have number of tax like excise, custom, and VAT. Okay, now the tax is grouped into GST. That is a burden. You see that burden of petroleum. The tax is more. Tax is related to 870 rupees. If the petrol is 110 rupees or 101 rupees. Now we'll compare the different form of organization. Sole trader, partnership, company, cooperative society. Sole trader, easy to form. Partnership, 1932 Act. Company, 1956 Act and 2013 Act. Society, cooperative society, 1912. No legal formality in sole trader. Legal formality is there in partnership. Not compulsory, but company it is compulsory. In cooperative, few legal formalities are needed. In case of sole proprietorship, the owner is the management. Partnership, both the partner of the management. In case of company, each and every person of the shareholder, they are management. In case of cooperative society, all the members, they are the manager or the owner. Basis of sharing profit, in case of sole trader, it is shared by himself. Partnership is shared as per the mentioned deed, as per the agreement in partnership deed. Company, the company will decide at their own how to share, the proportion of share held by them. And in case of society, the volume of business by each member. In proprietorship, it is single member. Partnership, it is minimum 2, maximum 50, 20 in case of banking. Company, in case of public company, it is 7. Maximum loan limit in private it is 2, maximum 200. And corporate society, minimum 10 members and no maximum limit. Okay. Sole trader does not have a separate legal entity. Partnership does not have a separate legal entity, but company have a separate legal entity, and cooperative society also has a separate legal entity. Sole proprietorship, no special income tax is there. Partnership also no special income tax is there. But in case of company, they're heavily taxed. But society, they're exempted from tax. In audit of accounts, it's not needed in sole trader, not required in partnership, but it is compulsory in case of company, be it private company or public company, and compulsory in case of corporate society. Winding up in sole trader, it is as per the will. In partnership also it is as per the will, but in company and in case of corporate society, it is as per the act, as per the rules and regulation. What are the criteria for the choosing the organization? At the starting of business, which organization will choose? Either you will choose sole trader, you will choose partnership, you will choose company, you will choose corporate society. You will find out the nature of business first. You are manufacturing business, you are retailing business. First, find out that. Number two, the volume of business. You are doing a small business, you are doing a long business, okay, large business. Suppose if the volume is large, you need more capital, then you go for partnership company. If volume is small, you need less capital and there is less leaks, you go for sole proprietorship. Area of operation. If area is limited, then may go for sole trader. If the area is widespread, you go for joint stock company. Desire for control is another point. If the desire is to have control of the business directly, go for sole trader. If you desire, there is no desire to control the company directly, go for company form of organization. Capital is also important thing. Huge capital you need, go for company and partnership. You don't need capital, you yourself can manage and run the organization. Sole trader, you can do it. Government regulation also. You need more regulation to be followed in company, less regulation in partnership, no regulation in sole trader. What are the criteria at the time of expansion? What are the criteria? You need for larger financial resources. Large financial resources are needed. This is one of the important criteria how to expand. Internal reconstruction is needed. Internal reconstruction is a term in which you need reconstruction of reorganization of the organization, of the assets and liability, of all the things, and in controlling system also. You need specialist services, expertise in accounts, expertise in marketing, expertise in communication, expertise in information technology, okay, and tax liabilities will be increased if you expand more, and there is a more effective system of government control and government regulation. If a business is expanded, government will always have more control on your business expanding, and more tax will be collected. Increase in the problem of control and coordination, how to control the business, how to coordinate the business, having different branches if you set up, if you want to expand. So social enterprise, after choosing the choice of enterprises, social enterprise is also important. They have been established for the development of the society as per the National Entrepreneurship Policy 2015, and also as per the Skill Development Institute Ministry. They are very important for the society. I've already told. Business is done for the planet and the people. Profit is now not mandatory. Before, the profit was mandatory. Before, P come first, profit comes first, then come people, then come planet. But now, first come planet, P, then come P is people, then third comes profit. If you focus on only having profit and do business, it will be not for a long period of time. You cannot have a sustainable business. If you focus on the planet and people and you start business for a long period of time, then profit will come. Then it comes public enterprises. Okay, after social enterprises, it is public enterprises. This unit 7. We will study the features and objective, the problems, and the public. What is public corporation? What is government company? What is departmental organization? That also we will study. Because public enterprises are divided into 3 types. That is departmental organization, statutory public corporation, and government company. Public enterprise consists of the, like example is LIC, Coal India, Okay, Hindustan Aeronautics, Hindustan Machine Tools, they're the example of public companies. They may be owned by the central government or the state government or local government. Okay, there may be Navratna company, Maharatna company. Maharatna company, Coal India, BHEL is there, GAIL is there, NTPC, Bharat Petroleum, Steel Authority India Limited. Navratna company is like a Hindustan Aeronautics Limited. MTNL was there. Before Nalco was there. Bharat Electronics Limited was there. Mini Ratna company was also there, like this Central Mining Planning and Designing Institute, Artificial Limbs Manufacturing Corporation, Airport Authority of India. There also Mini Ratna company. There was a disinvestment portfolio in the under the Prime Minister Atal Bihari Vajpayee, when Jaswant Sinha was there. The main objective was to sell this public sector and to make them privatized, because at that time the public sector, the public enterprise were not running profit. So after the minister was set up on that, and after that, when the government went out, the minister also was removed. This is the difference between public enterprise and private enterprise. Private enterprise, the industrial houses, when commercial organizations are there, it's set up under the individual and group ownership within some rules, regulation. There may be medium, small, or large organization. Their main objective, private enterprise main objective is profit. Public organization main objective is to provide service to the public, paid by the government. And public enterprise main objective is to give social activities, social welfare, okay, and to uphold the public interest. But private enterprise are set up to have their own objective, undertake the business activities, and to earn much and much more profit. Public enterprise, their main objective is to maximize social welfare, to achieve development of the economy, to achieve the profitable objective, to channelize the resources, to serve the secure public welfare, and to have a balanced regional development. Balanced regional development means one place it is more developed and another place it is not developed. Okay, you take the example of Bhubaneswar, that Patia was not developed 10 years before, but making that area develop in Bhubaneswar much more than the other area, so it has now developed. There are a lot of problem in public enterprises because sometimes they are registered under joint stock company. Before the joint stock company was there, now known as company or corporate sector or company sector. And the board of director of the public enterprise, they're not fully professionals before, so that was very difficult, and there was very too much of job security for the manager level, and the system of reward punishment is very often in government sector. Okay, public enterprises, very large in size compared to private enterprises, because government set up, and worker union is very strong. You see the worker union of Nalco is very strong. They're very strong and well organized. And in case of departmental organization is the oldest form of organizing this public enterprise. The business activity are conducted under overall control of the department of the government. Okay, the main objective is to have the revenue for the government, to have control of the service sector, and to have a strategic planning, and to make the importance of the government or departmental organization feel with proper planning, and efforts should be there, and adequate funds should be also allocated. Because the departmental organization the head of the departmental organization rests to the ministry, and all the employees are the government servant, then known as the civil servant, and there should be budget allocation for them. Proper accounts and auditing system should be followed, so that the proper control of the government. Okay, misuse of the public fund, the government fund is the public fund, so taxation government is collecting the fund, and economic activity should be properly utilized, and each and every monetary transaction be properly regulated. Sometimes there may be the impact of bureaucracy through mismanagement of fund, red tape and delay in decision making takes place in government. Each and every decision takes so much delay in decision making, and And there may be suffering from political instability if there is a changing government department scenario also changes, the ministry also changes. There may be sometimes they are merging with each other, they may be diversifying from each other, and professional expertise is needed which is not there in the department. Okay, because department sector work like the organization way, and the private sector they work like the management style, the corporate style. And this is the absence of competitor. You see in the example of Boynica. Okay, the government can manage well can go ahead with that different style, but it is the costly product and they're not managed properly. There is absence of competition. Okay, the private doing that thing, they're engaging more, but in government only the government is there. The government is are unable to compete with the private sector, because the private sector is focusing on profit, government is not focusing on profit. And last, I think, is public corporation. They are a body corporate under the parliament or state legislature, the special act. It is known as a statutory company or statutory corporation because the capital is wholly owned by the government. And there is a managing committee as per the provision of the act. It is created by special act of legislature. It is a corporate body corporate owned by the state. And for managing that, we have a board of director. And sometimes also you can create the question, you can ask in the parliament, in both houses of the parliament or the both houses of the legislature, also state legislature. Even though it is owned by the government, the statutory corporation, the public corporation is owned by the government, it does not operate as a wing or part of the government. Okay, it has to work like a business for format. It has its own staffing because employees are not government servants, because corporation owned and managed by government, but the employees are not government servants because the employees are recruited, remunerated, and by the rules and regulations done by the corporation. Okay, and the pay and benefits are also different from those of government servant. The corporation can have the necessary freedom also. The public importance is more here. There should be also flexibility. Okay, there may be some season of marriage sale or Durga Puja session also. They can, like Boynica, they can also have that flexibility in selling. They also can avoid red tapeism in a government organization because of their own corporation, and they can raise the more capital, protect public interest. Their objective is to work for the service of the people, work for the service of the upholding the public interest, making economic welfare activities more, making social welfare activity more. And they also can provide benefit to also large scale activities. This is the important thing. Limitation is that sometimes compared to it, the departmental activity, they enjoy more autonomy. Okay, the autonomy public corporation is closely and systematic control by the government. It matters where they have the freedom, and that's set up by special act of parliament. So their any change in objective or the activities of the organization of the corporation cannot be done easily. So they're not flexible, and there may be some conflict of opinion between different types of group of the corporation, of the different types of board of directors of the corporation, and they do not have to face any competition. Okay, that's why they do their work very slowly and easily. Apart from the private sector, they face competition from others. They sustain in business. So then the government sector, though they may run on losses, but they will do on their own rules and regulations. They have some limitation. Excessive public accountability. The public corporation work with the service motive, not with the profit motive. So the public accountability acts as a yardstick. Okay, a yardstick in the operational efficiency of the enterprise. Government company, government company, sometimes you have mixed ownership, like Hindustan Machine Tool. Main objective is to promote the industry, promote trade, and it is created by the Companies Act. Private company scope is there also, huge scope is there. There are private organizations, those who are maintaining or creating GDP for the company. And the government company, the company having not less than 51% of paid up share capital will be held by the central government or the state government or both. And the auditor of government company, it will be appointed by the CAG, Computer and Auditor General of India. And the annual reports of the government company are laid in both the house of the legislature or both house of the parliament. The provision of government company, the central government of the power to exempt any provision of the central company act from the government company. So this is the rules and regulations of the government company. There may be some merit and limitation, but in case of government company, you get public criticism. Okay, and there is no lack of profit. There is always a lack of professional management. But you have the easy to transfer. The farm is or the company is helping you to transfer the ownership also. Okay, and also it allows the private participation also. So if you compare the departmental company, government company, and public company, then you will find the difference is that there are different companies who operate within the organizations, and the different company operate within the India. Okay, so the difference is that you have to find out the departmental company range. They works with the department, and the public company they act with the special act of parliament, and government company they formed by the company act. Department company there is no scope for private participation, and in public company also no scope of private participation, but in government company there is scope. Okay, and employees are the civil servant. In case of departmental company, in public, then employees are not the civil servant. In government also, they are not the civil servant. International business, MNC, multinational company means the company having the business in multiple nation, in many nations. That is known as multinational. International business is all commercial transaction or commercial business. It may be private or government. Investment in transportation and sale take place between two or more countries. That is international business. It takes place in many nations. Business which takes place in many nations is known as international business. Maybe sale, maybe transportation, maybe purchase, maybe allocation of asset. Why business become multinational? Because to get the benefit of large scale of production. In India, if you have large scale of production, you want to take benefit, you have to go for MNC. To protect themselves in domestic market, to expand to the international market, and to catch the growing world market. Foreign competition, to compete in foreign, if you are able and if you are competent to do it. Okay, and to reduce also the tax opposition also, there may be some scope for tax reduction. That also benefit also you can get. And import and export, and to take also advantage of the technological benefit, technological expertise, that also you can benefit, that also you can take. There may be many issues and controversies of MNC. Some of the host countries, some of the foreign countries also compete with you, and there may be some transfer of technological change. There may be transfer of research and development. There may be some balance of payment issues, import and export. And so you have to be very efficient and effectively to be a MNC company, because MNC do not create a backward or forward linkage. Okay. So Indian perspective is that Indian company operating overseas, various company, you know that 60% of the revenue of the Tata is coming from outside India. There may be the Tata, Wipro, Dr. Reddy, Infosys, ONGC, Mahindra, okay, Asian Paint, Aditya Birla, etc. Various companies. This is the Indian perspective of MNC. This is over. Any doubt also you can ask. Those who have any question, you can ask, unmute and ask. Answer, instead of writing in the chat box and leaving the group. Okay, don't do that such type of mistake. If you don't want to listen to class, you can leave. Or writing in the chat box and going without understanding the meaning of the concept of the paper. Okay. Thank you.
Hello, 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 hello,
हेलो खत्म छोड़ दी सब कुछ आगे से फ्यूज हो